Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, an old friend of ours, Peter Schiff, the CEO of Euro Pacific Metals. Peter Schiff, thank you for joining us today on USA Watchdog.
Hey, thanks for having me back on.
Well, listen, I know you've been beat up. You sell physical metal. I mean, who would have thought they would employ the tactics and the naked short selling and what's been going on in the gold market? But it appears that they're running out of gold. That's what a lot of my sources say. Paul Greg Roberts says the government doesn't have the gold they say they do. They can't deliver Germany's gold. Let's talk about this little vault in the price of gold from 1240, 50, up over 1300. How do you see this?
Yeah, of course, the short sellers never even had the gold to begin with. They're selling gold they don't have. And I think the shorts are getting a little bit nervous, but they're going to get a lot more nervous as we turn up the heat here. Gold is now above 1,300. I think it's going to be above 1,400 before they start to panic a little bit. And I think that's great. I like the fact that the market is moving up and nobody is buying it. Nobody is paying attention to it. And if they are, they're dismissing it. People think this is a head fake, a dead cat bounce. Instead, it's the resumption of the bull market. It's been underway. You mentioned I sell physical metals. I've been doing it for a dozen years. 2013 was the first down year that I've had since I've been selling gold, and it might be the last as far as I know. I think we're going to have a very, very strong 2014 and beyond. And it's not just the physical metals. My brokerage firm, Euro Pacific Capital, also helps our investors own mining stocks. In fact, we launched our first ever precious metals mutual fund, gold mutual fund, the Euro Pacific Gold Fund, which was launched in the third quarter of 2013, because I think the valuations are phenomenal in the mining sector, because everybody assumed that the price of gold was going to keep falling, and those assumptions, those false assumptions, were built into these share prices. So I think there's a tremendous opportunity for people who really want to hit the home run in gold and silver to get into the mining companies, either through my mutual fund that I have or by owning some of these shares directly.
Well, I'll tell you, that's some big kahunas in the kind of blizzard, this down market where you've been beat up pretty hard. I mean, people have been dogging you hard. And I think, as a long-term investor,
I'm used to that.
Go ahead.
I always get them back at the end, though, because they're the ones that end up crying, and I get the last laugh.
Well, you starting this fund in the third quarter of 13 in this dismal performing, gold market. If you look on the short term, and the people who bought in 2006 were doing great.
The best performing stock funds so far in 2014 are the gold funds.
Yes. That's your revenge. I love that.
Yeah.
And the deficit, just recently you wrote about this CBO report about how, the gall of them saying, well, it's just people needing, some time off, 2 million, the effect of it's equivalent of about 2 million jobs coming out of the workforce in terms of people trying to, stay under the Obamacare limit for their funds, for their health care. And you skewer the Democrats on this. But the bigger picture is, we're losing jobs. The economy is tail spinning. Aren't they going to print money like crazy?
And more important, we're losing the productivity that may have been associated with those jobs. We're losing the tax revenue that may have been associated with those jobs. So the employment base is collapsing, so the tax base is collapsing. The budget deficits are going to get bigger than ever. When they just voted to raise the debt limit, they didn't actually raise the limit. They suspended it. So in fact, the sky's the limit. They can pile on as much debt as they want to, because right now there is no limit on the amount of debt we can have, which means we're going to get a lot more debt. They think this is good news. Everybody said, great news, we raised the debt limit. Why is that good news? Maybe that's good news if you're a gold investor, but it's bad news for everybody else.
Because the inflation picture, right? I mean, that's really ultimately what people are protecting themselves, not just inflation, but, there's a, I've heard you say, and you've written a book about this, the real crash, which means a bigger crash is coming. You've been talking about this, and people think you're crazy because you had this nirvana, and you're not crazy. I'm not calling you names. But aren't we headed for an even bigger mess than 08?
Of course. The messes get progressively bigger because the bubbles get progressively bigger. We have the biggest bubble ever blown right now because we have a simultaneous bubble in the stock market and the real estate market and the bond market. We've got the stock market bubble of the 1990s on top of the real estate bubble of, 2000, the double bubble and the bond bubble on top of it. So the air is coming out of all of them, and the Fed knows the bubble's too big to pop. That's why they're going to come back with even bigger round of QE than the last round. And when the market figures out that this is what's coming, we're going to get hit with a tsunami of inflation because I don't think the world is going to absorb all those excess dollars as readily as they did the last time. I think we're going to be stuck with a lot of that money, which means it's going to bid up consumer prices right here in America. Janet Yellen says she wants more inflation. Well, she's going to get it.
I know. I don't mean to laugh, but because this is really god-awful government policy. That's and the other thing is that if we could have a major problem that with not just inflation but the bond market. If we start getting this inflation, isn't the bond market going to be the first thing to go poof?
No, it won't be the first thing. The dollar will go poof first because remember, the Federal Reserve can buy up all those bonds to stop the prices from collapsing. But in order to do so, it has to print dollars. But eventually the dollar collapses because the world figures out the game. So the Fed can print all the dollars they want, but they can't force anybody to accept them. That is going to be the problem. And gold is already giving you a window into what is going to happen. But, it's moving up now, but you ain't seen nothing yet. Wait till we start to see gold moving up $100 at a time each day. Those days are coming and when the bottom drops out of the dollar, and it's a long way down. I mean, right now you've got everybody worried about emerging market currencies. The U.S. dollar we have much bigger problems. We're not an emerging market. We're a submerging market.
Oh, man. Well, you wrote a big piece in the middle of January back when gold was still pretty depressed, talking about the deflation myth. But it's more than just inflation and deflation. I mean, we're talking about something destabilizing. If the dollar goes poof, like you say it will, I mean, it's not even a question of whether you have inflation or deflation, whether gold does both well in both extremes. Isn't this a mad dash for real tangible capital, real wealth protection?
Yeah, well, you're going to have deflation from a perspective of gold. If you own gold, the price of everything is going to go down for you. The price of stocks will go down. The price of real estate will go down. And that's a good thing. When you have money, deflation is good because now all the things that you want to buy are cheaper. But if you have dollars, then all you're going to see is inflation. The price of everything you want to buy is going to go up. That's bad news. See, the government is trying to convince us that deflation is bad and inflation is good. No, it's not. For the consumer, deflation is good because it means that the things that you want to buy become less expensive. But the government wants inflation because inflation benefits debtors. The government is the biggest debtor. It allows you to default on your debts without having to admit that you're defaulting. And inflation is what the government needs to keep the real estate bubble inflated, to keep the stock bubble inflated, to maintain the illusion of prosperity even as people are getting poorer. So the government wants inflation, so they have to convince us to fear the opposite. Instead, we should be embracing it. Of course, what we need is deflation. The prices are too high for stocks and bonds. They got to come down. Interest rates are too low. They got to come up. But the government won't let this happen. But we are going to get deflation only in terms of gold or silver, not in terms of the funny money that they're running off their printing presses. There, you're going to get massive inflation, and it's not going to feel good. It's not, people saying we need inflation. We need it like a hole in the head, right? We need economic growth. And economic growth produces abundance. You get more supply and prices come down. That's what happens in a growing economy. But in a collapsing economy, in an economy suffocated by government, prices go up because production goes down. And that's what we've got in America.
Is this latest stunt last week by the Obama administration putting off yet another section of Obamacare? Companies between 50 and 100 can, phase in Obamacare, the requirements of free abortions and free birth control and free everything that somebody has to pay for the free. Is that going to make a meaningful difference to the economy and to the midterm elections in November of this year?
Well, it will make a difference. It might not be that meaningful in the short run, but it's interesting how he's now giving them 3 years so that he won't even be president by the time they have to deal with this. It's going to be somebody else's problem. But the funniest thing about it is part of the rule, in order to get the exemption, you have to swear to the IRS that you didn't fire anybody to get underneath 100 employees. So if you had 102 employees and now all of a sudden you conveniently have 99, in order to get the exemption, you have to pretend that the firing had nothing to do with your trying to get out from under Obamacare. But it's interesting that at least the president now acknowledges that employers will fire people in order not to have to comply with Obamacare. But, they never wanted to admit that before.
Well, I think the other big shoe that's going to drop when people finally realize that, wait a minute, you mean what the employer is paying for my health care, that's a tax? That's going to be taxed? I'm going to get another pay cut? I mean, isn't that the other shoe that people need to be thinking about? Is that this is, liberals are going to hate this because, they hate it when they're taxed.
Look,
they
there's
want
so
rich
many
people like you to be taxed.
There's so many shoes with Obamacare, it's like a centipede. It's just one after another. The whole thing is a disaster from beginning to end. I mean, it was wrongly conceived from the first. It never should have been enacted. I mean, if you think it's bad now, wait. It's just only going to get worse. It's only downhill from here. That's how bad it is.
So we're gold in the 1300s now, and I don't know how long it'll stay or how long it'll be above water. Where do you suspect gold will end up this year? And I guess I'm putting you on the spot. Where do you think it'll end up at the end of 2014?
It'll probably be a lot higher. I just can't really guess how much higher. It depends on how much of the scenario that I believe is coming plays out in 2014 as opposed to 2015. But would I be surprised to see gold up, at record highs? Would it surprise me if at the end of the year gold's at 2,000? Wouldn't surprise me at all. That doesn't mean it's going to be there for sure. Maybe it'll only be at 1,500 or 1,600. Maybe it'll be at 3,000. I don't know. I know eventually it's going to skyrocket. And the most important thing for me, and I think for my clients, is that they own it before it happens. To me, that's the most important thing, just to be in it when it takes off. I don't want to be scrambling to buy my gold when it's going up $100, $200 a day. Let somebody else, deal with that. I want to buy it while it's calm and while the prices are low.
Well, I want to give you one last question. I know I didn't really ask you about this, but you're a smart guy. If you're investing, you got, $3 billion under management, all told, with all your funds. So you are looking at things globally. And right now in the Middle East, things are so bad that Israel and Saudi Arabia are now buddies. Now, and last I checked, Israel and Saudi Arabia were allies, not Iran. And so my wild card question to you is, Netanyahu's coming to the U.S. I believe it's, just early. He's coming to the U.S. to talk about this here in March, early March. And I'm sure that's what he's going to be talking about because he has stated publicly that the Iranian military nuclear program, he said this a few weeks ago, must be stopped. The Iranian military nuclear program will be stopped. Now, I don't know Benjamin Netanyahu that well. I don't know him at all, really, but he doesn't strike me as a blowhard.
Yeah. My scenario, my bullish scenario for gold doesn't factor in any potential military threats, whether in here, in the Middle East, anywhere. I mean, if any of that happens, you call it a wild card, but that's only going to add fuel to the fire. I mean, if we get some kind of a military action, particularly a military action that might be disruptive to the oil coming out of that part of the world, but all of that can only make gold that much more attractive. But even if that doesn't happen, and hopefully things like that don't happen, the last thing I want to wish for is for a blow up, in the Middle East or any kind of a military action that's going to lead to a loss of lives or a disruption of trade. But if any of that happens, then that just makes the gold trade even better. But it doesn't have to happen. Even if everything goes perfectly in the Middle East, the dollar's still going to crash. The U.S. economy is still going to collapse. The Fed's going to print a lot of money. The price of gold is going way up. I mean, right now you still have this false belief out there that's shared among the majority of investors that the U.S. economy is improving, that we finally have the real recovery. Ben Bernanke's a genius. He saved us. Janet Yellen is just as smart, maybe even smarter. We got nothing to worry about. It's just, smooth sailing from here. The U.S. is the cleanest dirty shirt in the laundry, whatever you want to say. Buy the U.S., buy U.S. stocks. This economy is great. All that is wrong. We had a big bubble, the biggest ever. The economy is a disaster. It's getting worse. The Fed is not getting ready to pull off the exit strategy and declare victory. They're going to double down on the same failed policies. We're getting more QE. It's not going to work, but the world will finally get the message that it's never going to work. If we have to abort QE now, right, because the economy can't handle it, the market can't handle it, people are going to realize if we can't stop it now, when can we ever stop it? And the answer is we can't. The only thing that's going to stop it is a crisis that's externally driven. When the dollar crashes and we can't get away with it anymore. When the dollar loses its status as the world's reserve currency and America is finally forced to deal with its problems, to live within its means and to find real solutions to these government-created problems. But when that happens, as I said, you better already own your gold. You better have already sold your dollars because you don't want to get caught up in that.
Peter Schiff, one of your better interviews, my friend. Always enlightening. Gave us, the U.S. and the global perspective. You're a smart man, my friend. Thank you for sharing your intelligence and your insights and analysis on USAWatchdog.com.
Yeah.
Appreciate it.
Well, thank you for having an intelligent audience to share my views to.